I just want us to go and read that question. Because the first thing that you need to do is analyze everything, and then you start with the date, because these calculations that you need to do of depreciation mostly. Then you need to know, because you can't prepare accumulated depreciation or depreciation account when you do not have depreciation. And even in the asset disposal, you will need to calculate depreciation, accumulated depreciation for that asset that has been disposed. So you need that method. But the most thing that we find it difficult with asset disposal question is the date. Once we know how to evaluate the periods of each asset, or the one that is sold, the one that is old, the one that is being purchased, then we're going to be good. Let's see what's happening here. They're saying the source 2017 main exam question 4. Agostino Limited has provided the following information with regards to the company's fixed asset. On the 31st of March 2013, machinery A was traded in for machinery B, costing 365,000. 79,626 was received for the old machinery, and the rest of the purchase was settled in cash. The machinery traded in was originally purchased on the 1st of January 2009 for 185. Depreciation is written off using straight line method at 15% per annum. Ignore that. You are required to prepare the following general ledger accounts properly balanced for the period ending 31st December 2013. Machinery, accumulated depreciation on machinery, depreciation, asset disposal. So they are saying to you that the year ended, you are preparing the general ledger accounts for the period ended. Just want to put it here. Period ended. Let me just put it. Period ended. The period has ended on the 31st of December. Can you see what I'm typing?
Yeah, I can see. But can you please increase the font? Maybe let's make it 16.
Okay. Let me do this.
Yeah, much better, much better.
Okay. Thank you. And then I'm dealing with the period now. The period ended on this day. Then when did I start? Now you need to evaluate when did you start. The period ended on the 31st of December 2013, started on the 1st.
31st of March. 1st of January, sorry.
Yes, 1st of January. I'm just gonna say 1st Jan 2013. So you need to evaluate the period like that. You need to check the period like that, right? Remember the year, the month, the month that is going to, that is following December is January, but this one is a normal year. It will be January, February, right? Maybe we can go and do this. Let's say the year ended. Let's just evaluate the period. Just learn that part as well. Let's say the year ended on the 31st, maybe on the 30th of September. Let's say the year ended there. And then 2018. Then you need to evaluate when did the year start. So to evaluate is easy. You don't have to stress yourself. You need to ask yourself, what is the month following September?
It's October.
It's October. So, but since we are on 2018, so it means the year started the previous year in October on the 1st. So you're gonna say 1st October 2017. If you count, remember we're dealing with 12 months period of a particular company. So if you count from October to September the following year, it's going to give you exactly 12 months.
Oh yeah.
If
Yeah.
you don't mind, we can do that. Every time when you check, you find that the year has ended during the month of the year. You need to know what is the month following, and then the previous year. The year is going to start at the previous year in the following month. I don't know if it makes sense.
No,
Let's
you are
try.
making sense.
Let's try this one. Let's try this one. The year ended 30 June. The year ended 30 June 2020. When did it start? Need to
It's gonna
evaluate
be
there.
July, ne?
Yeah, it's gonna be. It started in July. In July
2019.
2019, correct. And then on the 1st of July, you know. So it's easy. Always you need to check that. It's very important. And I know sometimes when we teach these things, people think, it's easy, Musa, I will understand. It's easy now. I'm telling you, it can be easy now. You need to go, sit down on your own and say, today I'm just, now for these 10 minutes, I'm just doing months. I just need to see if the year ended on this day, when did it start? Like you do it on your own. You will be able to understand what you are doing. These months are the ones that are going to make us struggle when we do accounting equation. The rest is easy. I can promise you the rest is easy, but the problem is when people are saying, it's easy, I'll get it. And then the test comes, now you are stuck with the months, you don't know whether you're going forward or backward. Yeah, well, so we need to
Yeah.
master. So our current period is started on the 1st of January 2013 and ended on the 31st of December 2013. Now, we don't care about the March thing. March thing is a different thing. You'll see how we're going to do it. It's going to be easy. So let's go back and hear what is it and what is it that we're going to record and what is it that they want. Ne? They are saying to
Okay.
us, uh, on the 31st of March 2013, machinery A was traded in for machinery B costing 365,000, right?
Yeah.
Okay. Now you need to ask yourself, what is that 365,000? Is it a new vehicle? Is it an old vehicle? What is happening with it? What is happening? Okay, maybe let's start with trade in. Ne? Before
Yeah.
I go far, what is trade in your understanding? Maybe if we can start there, in your understanding.
Like it's more like a replacement.
It's more
Like
like a
trading.
replacement.
Yeah.
Okay, that's correct. Maybe if I were to put it this way, what kind of phone are you using?
What kind of what?
A phone that you are using.
I'm using an iPhone.
An iPhone, okay. Let's say you are using iPhone 13. You need iPhone 14. You go and exchange and add more money. Like
Like
maybe,
I
for
take the
example,
iPhone to the iStore, the iPhone 13, and then I
yes,
will add, let's say, iPhone 14 cost 25K. And
yeah.
then the iPhone 13, let's say it cost 18. So I will add the remaining amount on top of the iPhone 13.
Yes, it will depend. If you bought it with 18,000, I agree you have used it, it might have lost the value. They will
Yeah.
value it in the store and tell you, okay, since you bought it at this month and it lost value to this month, maybe you qualify to pay, it cost, maybe the value of it can be 12,000. Therefore, maybe you need to pay this particular amount and then you give us the phone and then you pay this particular amount, we give you iPhone 13, I mean iPhone 14. Yeah,
Okay.
well, that's trade E, right? So they are
Mm,
saying here, they are saying you had vehicle, I mean machinery A. Machinery A is your iPhone 13, right?
okay.
Machinery B is your iPhone
14.
14. You understand?
Mm.
So it means it means machinery B is an addition, right?
Oh
It's
yeah,
a
yeah,
it's a new machine, right?
yeah.
Yes. And then machine is an asset. When asset increases, we debit this side. Let me do this. We have to debit. There, your debit side should be on your left. Eh?
Yeah, on my left hand
On
side.
your left, that's debit side. I just didn't managed to do that, but it's fine. Next time I'll just indicate. So your debit side is on the left, your credit side is on the right. So whenever we buy a new asset, we debit it, right? And they are
True.
saying to us, we bought this for cash, right?
Yeah.
Because they are saying we had to add additional amount of 79 something for cash, right? After
Mm.
trading in. So once they told us it's for cash, it means we bought, we're gonna say 365,000 increase in machinery. Ne? I'm just starting like that you understand that part. But usually, I will show you how we usually start, but it doesn't matter. But I just want you to understand machinery B, it's a new machine, it's additional cost to machinery, right?
Yeah.
Therefore, they proceed and say 79,626 was received for the old machinery and the rest of the purchase was settled in cash. The machinery traded in was originally purchased. Now they are saying the machinery A, which is the one that was traded in for a new one, right?
Yeah.
I don't want to lose you. You need to get that right. Is it fine?
Yeah, I'm fine.
Okay, they said the machinery traded in was originally purchased on the 1st of January 2009 for 185,000. So you see on the answer sheet there,
Yeah.
balance BD means opening balance of that particular machine that was available. So the machine that was available is the one that was sold at the beginning of the year, right?
Mm.
Of 1,855,
1,800.
185,000, right?
Yeah.
So there we go. Yeah, well, we usually start like we usually search for the opening balance of the machines that have been there. Then we found that okay, we have 185,000 opening balance of the machine, and it's the one that we have disposed in this case, right? It's an easy like question. That's why I had to start with an easy question that people understand the depreciation part and the asset disposal question. So they are saying machinery A is the one that was traded in. It means it's the one that was disposed, right?
Mm.
So we'll go to the asset disposal and say 185 because we traded in, we disposed that by trading in. Are we fine?
Yeah, I am.
If you don't understand, then you stop me. Ne? Hey Cindy, welcome. You can mute. I will send the recording. Yeah, I'll send the recording.
Yes. Thank you, Tola.
Okay, sure. So um in this case, they said to us balance this properly, right? So in order for us to balance properly, are you still with me?
Yeah.
Okay. In order for me to balance properly, I need to check which side is bigger than the other, right? So which
Yeah.
side is bigger? It's the
It's
debit side.
the
So
debit side.
how much is the total there?
550.
550,000, right? You're
Yeah.
gonna put it there. 550,123. Ne? It means even
Yeah.
this side, the total will be 550,123. And then we take the total, we minus the one that we have that side. Then we will balance, we'll find the balance brought down there. Say 550,000 minus 850,000, you will still find
The
365,000,
365.
right? And then
Yeah.
the you see they put the 1st January balance brought down under the total. Here,
Yeah, and yeah,
under
I
the
can see
total.
it.
Yes, that is the closing. Again, the closing balance is this one of 365,000. This side of carried down.
Yeah.
You are going to take it here as the opening for the next period. I don't know if I make sense.
Oh, okay. Yeah, it does make
This is
sense.
how, yeah, this is how they say you balanced properly. When they say balance properly, they mean you must balance it like this. Don't, you must balance and then indicate the total for next year. You have balanced it properly. I don't know if I
Yeah,
make sense.
I get you literally.
Okay. All right. So that's how we balance this properly. Right. That's how we balance properly. So I need us to go and prepare the accumulated depreciation account if you are fine with the machinery account. Are you fine with the machinery account?
Yeah, I'm cool. I don't know with some gay. I think I'm cool.
That you just need to go and go back and try
I,
to do it again.
yeah, and do it alone also.
Yes, yes. So with the accumulated depreciation, you see they didn't give us any accumulated depreciation there. Ne?
Yeah, they only
They didn't give us
give us,
anything
they didn't
at
give us
all.
anything.
Right. So now we are going to calculate, we are going to do calculations ne? Using the straight line method, right? They said we're using the straight line method, right?
Sure.
Okay. So since they said we're using the straight line method, I want to go down there. We do calculations for the depreciation. Ne?
Sure.
There we go. We're going to calculate depreciation for the sold or for the trade in. You see, you can call it sold. Let me just say, or trade in or traded in, right? Which is the one that cost how much? 185,000. You remember?
Yeah, the
Are you
one
with me?
for 185.
Yes, we're going to calculate depreciation for that. Let me see calculations here. And then I'll say depreciation here.
Are you giving out the method for?
Yes, I'm
Okay,
gonna give that. So they are saying we are using which method here? Straight line, right?
straight line method. Yeah.
Straight line method. So straight line method, it's cost price multiplied by the percentage given multiplied by the number of months you divide by 12. You'll get your depreciation. Are we fine?
Yeah, cost price times a percent, ne?
Yes. The cost price minus multiplied by the percentage given multiplied by the number of months you divide by 12. Right?
Yeah.
So now we're going to determine the period of the sold. Ne? First, before we calculate depreciation, we have got the method. Remember, we're going to need number of months and get we divide by 12.
Yeah.
So we have to determine, or maybe we can do this. For you to get it right, you can say, okay, let me come this side before I calculate. You can say, let me determine the cost price of the sold. Ne? Determine the cost price of the sold. It's going to be cost price of the sold is how much? Cost price of the sold is how much? Let's determine those. Cost price of the sold is how much before we calculate. You remember the cost price of the sold or traded in? Hello?
Can you hear me?
Yes, I can hear you.
It's 185.
Yeah, it's 185. So I'm gonna put 185,000 rand there as the cost price for the sold. And then now we have to determine the percentage to calculate depreciation. The percentage. The percentage, check the percentage on the question paper, how much?
15.
It's 15.
15.
Okay. Just want us to be this 15%, right? And then 15%, and then we go the method we're using. The method we're using is straight line method. Okay, let me just say straight line, and then we're gonna determine the period. The period. The period. The period, right? The period. So when you check, they are saying to us on the question paper, ne? On the question paper, they are saying, are we all on the question? On the question
Yeah.
paper, they're saying
Yes.
the machinery A that was traded in was originally purchased on the 1st of January 2009. It means it was there from the 1st of Jan 2009 until let me see, until they trade in. When did they trade in? They trade in on the 31st of March
2013.
2013. So the machinery was there for that period, right?
Okay.
Was there for that period. So we are fine with that. So now we are going to calculate depreciation for each year until we reach 31st March 2013. Am I clear?
Okay.
Okay, let's start. Every time, guys, if you are stranded, you don't know what to do in the test, identify all of those things for what you are doing. You will see you won't go wrong. Identify cost price, the percentage, the method, the period. Then we are fine. Okay, so now we are going to calculate depreciation for we're going to calculate depreciation for the period of 2009, for the year 2009, right? So let's do that. 01. I'm just gonna start with the date and then I do calculations. Do the date, do calculations. Okay. So 01 Jan 2009 until 31st December 2009.
13.
Then
19.
we'll calculate depreciation. So our
We're
depreciation
starting with
method,
the 209, eh?
yes, with the
Oh,
year
yeah.
that it was purchased.
Sharp.
Yeah, start with the year that was purchased. So with the year that it was purchased is going to be how much? It's going to, we are following the method. Look at the method there. It says cost price. How much is the cost price?
It's
185.
185.
185,000. And then we're going to multiply by
15
15
times.
over 100, right?
Okay.
Yeah.
And then we multiply, that is percentage or over, then we're going to multiply by
12.
12,
It's
divided by 12, because it was there the whole year, right?
the whole year. Yeah.
Yes. And then how much is
Yeah.
the depreciation there?
Mm,
I get 27,750. Just confirm with me.
185. Is correct.
It's
Yeah, that's
correct.
correct also
And then
on my side.
we go to,
Yeah, it's two
okay,
seven five
27.
zero.
Okay. And then now we're going to go to 2010. 2010, we're still going to follow the straight line method. It says how much? It says what? Cost price. How much is the cost price?
The cost price it's
How much is it?
185.
185. The cost price didn't change. It's still the same. Ne? Still the same. Nothing changed. And then we're going to multiply by the percentage. The percentage didn't change as well. It's still 15. I don't know if it makes sense.
No, you,
15.
you you do make sense.
And then the year still the same. 12 months, right? Because it's going to be multiplied by 12 divided by 12. Then it's equal to the same. The amount is going to be the same because it's going to be 27,750 because nothing changed, right? We are following the method. Nothing is changing. We are following the method of straight line method. Is that clear?
Yeah, that's clear.
Nothing changes, guys. Don't be confused. Nothing just that has to change. So every time is going to be like that until we finish. So we are going to do 2011 now. Don't worry, we're not rushing in waves. I want to understand what's happening. So that this is the reason why I'm doing this is because in the future when we do other methods, you'll understand why things has to be like this. So don't worry. Now we're doing 2011. 2011. The cost price is the same. The period, I mean the month, the percentage is still the same. The months are still the same. So this won't change. It's going to be the same until we finish. Am I clear? Because nothing changes. You're still going to say how much is the cost price? Is 185,000. Then you multiply by 15. You divide by 100. And then you multiply by 12 over 12 because it's the whole year. So it's 12 months, right? And then nothing will change. Nothing will change. It's still going to be the same. Is there any question? If you don't understand, please do ask. Then we're going for 2012 now. Nothing is going to change. The cost price is still the same. Even the depreciation is still going to be the same for that year. Are you still with me, guys?
Yeah, I'm still around.
Okay. And then we are going for 2013 now. Ne?
Yeah.
2013, 0, 1, Jan. The vehicle was there from January 2013 until they sell it. And they sold it when?
Uh, 31 March.
31 March. So we're going to end there, 31 March. There we go. So
Yeah,
from January to 31st March is how many months?
it's 3 months.
It's 3 months. So it's going to be like this. The price is going to be the same. The cost price is going to be the same. Multiply by 15. The percentage doesn't change. Multiply by
And then it's
multiply
times
by
3 over 12.
3 over 12 years. And then it's equal to how much? Now let's calculate.
6937,5.
69, and half
Three
of the nearest. 38.
eight.
Yeah.
38.
Yes. Now we are in the right track. Now we know what we're doing. Right? Now we are
Sure.
there.
Yeah.
So now, we are done with the depreciation for the sold. Ne?
Yeah.
Okay. So we are going to start with depreciation for vehicle for B, which is the new. Let me bring it here a bit. So we're going to start with the vehicle for B, which is new, right? So the vehicle that is for B, hello? Did I miss something? Is there any question?
No, there's nothing. Some guy, please mute. Yeah, you
Okay.
can continue.
So if I didn't miss anything, then we proceed like this now. Let's do the one for what's this? For B, which is the new vehicle that was traded in for. Ne? Let me say B, vehicle B. I mean machinery B, and then I'll just say new in brackets there. New. So it was traded in for, remember A was traded in for B.
Yeah,
So we're going
and
to
then
check the date when it was traded in. The date when it was
first
traded in, it was the 31st
that
of
was
March.
first
Ne?
of March. Yeah.
Okay. But now we cannot count March now because it was at the end of March. Ne?
Mm.
We're gonna start April. 1st of April. That's when
First
you're gonna
of
calculate.
April.
Yes. 1st of April, because March was done. There's no way you can calculate depreciation for new vehicle that was purchased at the end of March. Obviously, we purchased on the on the 31st of March. We're gonna start utilizing that machinery in the following month, right?
Correct.
So yeah, so we're gonna start by April 2013 until the end. 31st December 2013. Right. So how many months there? I think it's 9, if I'm not mistaken. I think it's 9. Just
9 months.
9
9.
months, yes.
Yes.
9 months. Let me just put 9 months there. 9 months, and then there, let me see, brackets, 3 months. Just not confused. And then now, you see when I said the period is very important, because once you do things and then the period is the problem, or you don't understand, then we're going to have issues. So 9 months there. So that means for the new machine that was purchased, we can start by determining the thing, the period. Okay, we're done with the period. We can go back and utilize our method, because this is what, if you are stuck, you can use this. If you don't know where to start, know the resources that you're gonna use to achieve something. You know, those who you are working, guys, you know, you are given projects. You need resources to complete that project. Then you need to determine, okay, I need the cost price. So the cost price of the new is 365,000, right? Am I correct? Hello?
Yes, it's 365,000.
Yes, and then the period is on the 01 April 2009 until December
Yes.
2013. You see? Then now we can go and calculate depreciation for it.
Okay.
Now we can go and calculate depreciation for it. So we're going to, we agree that it's 9 months, right? So we agreed. Welcome back. So we agreed
Thank
that
you,
is 9
Askisne.
months. No problem. So we agreed that is 9 months. So now we have determined the cost price, we've determined the percentage, we've determined the period, the method, the period. Now let's go and calculate depreciation for the new machine, right? So it's going to be cost price 365. But following that method, you remember cost price, we multiply by the percentage given, which is 15 over 100, multiply by
over 9.
9
9 over
divided by
12.
12. Then how much is the
12.
depreciation? How much is the depreciation for the new machine? How much is the depreciation for the new machine?
It's four,
It's 4. I
four
get
one
41063.
063.
Always just round off. Every time when you get 0.5 something, you round off or you round down or up. Depends. Ne?
Samki,
Okay.
are you winning?
Yes.
Okay, that's great. So now let's go back and complete our work. Our work, our goal is to prepare accumulated depreciation, and asset disposal, right? So I'm gonna start here. Now, how much is the opening balance of the depreciation for that machine that was sold? How much? Then you know how we're gonna do this. We're gonna do it like this. Don't worry. I got you guys. The opening, remember the opening balance is the closing balance of the previous months, right? The accumulated depreciation of the previous month is going to be the total of these four, because the closing balance of the accumulated depreciation is going to be at the end of 2012. I don't know if I make sense. If I don't make sense, you can tell me, I'll repeat.
Please tell again.
Please
Please
repeat,
repeat.
Dolans. I didn't understand.
Okay. Let me do this. Let me do this. Okay. Remember what we were calculating here was depreciations every year, right?
Okay.
Therefore, now a depreciation of at the end of the year of 2009, we will have what we call accumulated depreciation of 27,750. I don't know if it makes sense.
Yeah, you do make sense.
No,
Every year
no.
it's gonna be
Uh,
750.
yeah. So what I'm trying to say is that at the beginning of the year, when we purchased this machine on the 1st of January 2009, the depreciation of this machine was 0. I don't know
Uh-huh.
if I make sense. And then when we calculated, when we operated the machine until the end of the year, we had a depreciation of 27,750, right?
Okay.
So the accumulated depreciation is going to be 0 plus 27,750. Am I clear?
Yeah.
So at the end of the 31st of December 2009, we are going to have an accumulated depreciation of 27,750, because accumulated depreciation means depreciation at the beginning of the year plus the following year. So the first year we had 0. Then we're going to say 0 plus the one we calculated. Then we are going to have 27,750 at the end of the year, right?
Yeah.
Then the depreciation of 2009 will accumulate. There's a sound that is disturbing me a bit. Okay, let's proceed. So I was saying the depreciation that we got in 2009 is going to accumulate to the following year, as long as that vehicle is still, or that particular asset or machinery is still with us. So in this case, this is machinery. That machinery was there in 2009. The depreciation of that machinery was 27750. And then we're going to go to 2010. In 2010, we're going to have an accumulated depreciation of this depreciation plus this one, right? And then in 2011, we're going to have plus that. In 2012, we're going to have plus that. Then at the end of 2012, we have an accumulated depreciation of 27,750 for 2009, plus the one of 2010, plus the one of 2011, plus the one of 2012. I don't know if I make sense in that manner.
Can I ask, Darlene? So you're saying that we're going to calculate all these years, and we're going to include the which altogether rounds up as 111,000.
No. Yes, that's what I'm saying. But I want you to understand what I'm trying. What I want you to understand now is that we need the accumulated depreciation at the beginning. That must come here, right?
Okay.
Remember, we are in 2013, right?
So
At the
that's why
beginning
we're
of
gonna add all the years.
except for the current year.
Yeah.
Yes, we're gonna add all the previous years because remember the opening balance is made by the closing balance of the previous year.
Okay.
So I'm not going to touch the current year because the opening balance does not include or involve the current year.
Oh, okay.
I don't know if I make sense in that manner.
Yes, yeah. I
Yes.
understand.
So that's why I'm only gonna add the 4 years which are previous, which is this plus that plus that plus that. I'm going to leave the current year
Oh, okay.
because the current year cannot give me the opening. Because remember, we had to calculate for 3 months, and 3 months include January for the current year until March. So we won't touch that one of 6938. We're going to only calculate for the previous years. We add them.
Okay.
Am I clear?
Sure.
Yes.
And then let's go back there in our accumulated depreciation account. And then I will add all of them. And then how much I get? I get 111. If I'm not mistaken, please let me know.
111,000.
111,000. Yes, that's correct. And then I'm gonna calculate. Now I have depreciation that I have calculated on March 31st is the one that we calculate, is the last one for the current year. Now you see we are at the current year there. Depreciation that we calculated for the until the 31st of March. Can you see that? You see the date here I have put already. So we're going to take that depreciation for the 1st of January until the 31st of March, which is 6 how much? 6938.
38.
Yes, that's correct, right? And then on December 31st, we are going to take the one for the new, which is 41063. You see, these are the dates. They're directing us which one are we. So always when you want to do the right things, just draw the right column. You put the dates according to your depreciation. There's no way you can go wrong. Are we in the same page?
Yes.
Yes.
Okay. And then now, we're gonna add and get the total there. How much is the total? How much is the total? I get the total of
159
159
900.
again, another 9.
Add 00.
No, 001.
Yeah.
Okay, even this side is gonna be like that. 159,001. And then now you see where they said asset disposal
Yeah,
on the debit side. We need the
yeah.
total depreciations for all the years from the day we purchased it until the last day of purchase of selling. So it means we're going to start from 2009. We add everything. We're gonna even include the current year. We're gonna add all those depreciations down there. Let's go.
Okay.
These ones. These ones only for the trade-in, right? Only for the asset disposal. Remember, the trade-in is the asset disposal one, right? So we're gonna add everything. We're gonna add all these 4 plus this one. How much are you getting there?
Uh, 117938.
You're saying is 117
938.
938.
9938.
Yes.
Sharp. Now, the bigger side is the credit side, right? So we're gonna say 159,001 minus 117,938. How much are you getting? I'm sure you'll get
It's gonna be
141,063.
41,063.
Therefore, to balance properly, I told you you are opening for the next year. You are going to put this thing like this. 441. You're going to take this one, the closing balance one here, and bring it for the next period, which is 41063. We're done with that.
Mm. Okay.
So I just want you guys to please just what I ask you to do, just do. Go and repeat this, not even once, twice, until you just get it to yourself, until you just, many times, I don't know how many times, until you just understand it yourself. If they repeat it, you are lucky. You're just gonna write. You won't even calculate because you know. But if they don't repeat it, but they bring something different, the method of the asset disposal topics are the same. Nothing changes. The only changes is when we calculate depreciation using the reducing balance method or diminishing balance method. But other than that, the principles are the same, right? So if we can manage that, we are good. We are moving. So are we fine with the accumulated depreciation? Do we understand? Is there any question before I move to the depreciation account? You will see the reason why I said we must always start with the accumulated depreciation. It doesn't matter whether they're gonna say prepare machinery account and then depreciation. Always start with the accumulated depreciation
Yeah, we can
before
move.
depreciation. Okay. So now it's going to be easy. Now we are going to take depreciations for the current year now. Only for the current year, the one that we calculated. From here, we're going to take 6398.
938.
938, yes, we bring it here. We just copy and paste. You see, it's easy. 6938. And then we come in there, we're gonna record 41. Only depreciations from the accumulated depreciation we take to the accumulated depreciation on machinery. Am I clear? So it's
Yeah.
063 there. Right. And then the total. It's easy. That one is easy. Very much easy. And then once you've done with that, you're gonna get a total of, let's calculate the total if we are in the same page.
It's 48.
It's 48001.
001.
Even this side, the total is 48001.
8.
You know, most of the time we record depreciation in the statement of profit or loss and other comprehensive income, right? That is why they
Yeah.
are closing there with the profit or loss. This depreciation S48001 will go to the statement of profit or loss statement. That's why they're putting it there. Then we are done. Is once you are done and you understand and you have done correctly your accumulated depreciation on machinery or on whatsoever asset. Tomorrow it can be machine equipment, it can be a vehicle, it doesn't matter. But now It's done like that. And then we can go to the asset disposal. On the asset disposal, we are going to just record the asset disposal. Yes, copy and paste. You go to the machinery account. You take this.
The 185.
Yes, you take this 185. You go and record it down there in the asset disposal account. Here, 185 is the one that was disposed. So we are recording it there. Right?
Yeah.
And then you come this side, ne? When you come this side, you are going to look at your accumulated depreciation account where there is asset disposal, which is this one. Right?
The 117938.
Yes, you're gonna take that one. Always you take that amount that side, you bring it there. You bring it here. You see, once you are done with those, everything is done. So the main account that you must know better is the accumulated depreciation account. I don't know if you see that.
Yeah,
because there's a lot that you copy and paste from it to other accounts. Right?
Yeah.
And then we're gonna come this side. This side, they said there's an amount in the question paper where they said they paid for cash. 796 something. You're gonna bring it here. 79, I don't know,
79626.
79626.
Yes. And then you'll have profit. If the credit side is bigger than the debit side under the asset disposal, therefore you have profit. Then how much profit do you have? Firstly, let's calculate the total. The bigger side is the credit side. Let's calculate the total for that. I get 197. I just want you to tell me the last so that I know that you are in the same page with me.
One nine seven 564.
564, correct. And then even this side, we're gonna do the same thing. 197 564. And then you're gonna say 197 564 minus 185,000. How much do you get as your profit?
It's 12564.
How much?
12564.
1 2. You're getting 1 2.
And then 564.
564. Okay, that's correct. So if in case your debit side is bigger, you're not going to have profit this side. You're going to have loss, and your loss will come on the credit side. I don't know if it makes sense. If your debit side is bigger than your
debit.
So if the debit side is bigger than the credit side, that means we have a loss on the credit side.
Yes, well, that means you'll have accumulated depreciation on machinery, bank, and then you'll have another column to add loss on sales. And then you only have profit. Because there's no way you can have profit or loss at the same time. I don't know if you get my point.
Yeah.
Yes, so there's no way you can have both. Either you have a profit that will go to the debit side, or you have a loss that will go to the credit side. So if you have a loss, you will only have machinery there. And then we come this side, you'll have your accumulated depreciation, you'll have your bank, and then you'll add another column, you'll have your loss on sale of machinery. Then you're done.